Good evening, welcome to the ShadowTrader video weekly for Sunday, February 3rd, 2013. I've got a couple of different channels here drawn on the S&P. This is on a daily, and I'll put this out to a weekly in a second so you can see exactly in the bigger picture where these are. But right now, we're coming very close to some channel resistance here of the main dominant trend line, which again you'll see on the weekly a little bit. Here on the daily trend line, which is this one here, the resistance isn't until a bit further. I'm of the opinion that, especially given the bullish action on Friday, what the market wants to do is probably go like this and go a little higher and maybe even break out of the dominant channel a little bit and go maybe to this higher trend line. What's going on in like intermarket analysis, you can see that the Dow is actually very, very close to like all-time highs. We crossed the 14,000 level, and I'm purposely putting this on a monthly here so you can see here that high was in 2007 at 198.10, and Friday's close was at 14,009. So we're really relatively close to that. If you put this out like all the way, like, you know, say 20 years on a monthly, you see it even clearer. You can see right there, there's that high. Okay, so I think that the top in the S&P wants to somehow correspond with this level. So basically my focus this week is going to be watching these, you know, two trend channels and see which one it's going to be. It feels to me like the market wants to kind of break out of it at least a little bit, you know, that the predominant channel is not going to resist right away, because obviously we've got some, you know, we had some good bullish action on Friday. We did also get a little bit of consolidation. I'm also looking at the profile as always, and you can clearly see here that we have a lack of excess on Friday. So that's another reason why I'm thinking higher. Remember that an auction should end with excess, where you have, like, for instance, these skinny prints here. This excess was actually a double top. However, it wasn't, you know, higher up here, so it wasn't a top really. Here we had a very balanced profile, and we broke out of balance. And you'll notice in my pre-market commentary on Friday, I was saying, you know, if the market's going to go higher, then it really should find acceptance above this area here, which it did. And I mentioned that specifically because it's what I call a double POC. It's like points of control where a great amount of volume and time was spent at, you know, pretty much the same area there. Oops, sorry about that. Pretty much, you know, the same amount of time was spent in a similar area here, and the market did find acceptance above it. Notice that price action that went below that area was rejected. This is called rejection, and this is called acceptance. All right, acceptance is when you spend some time there and basically price says, yes, it's okay, I like it here, you know, and it builds value. You can see the profile is a lot fatter. So going into next week, I'm keeping my focus on the fact that we had a poor high on Friday, and I'm sorry about that. I don't know why that keeps popping up. I guess because I'm hitting the F1. We had a poor high on Friday. That was right in here. So we're looking for more excess to the upside, and going to keep in mind those areas on the S&P. If we go back out to charts here, you can see that, you know, if we do get an excess high, we're not that far away. I mean, the S&P's right here from the dominant trend line is 15.16. We closed here at 15.13, 17. But again, I do think it's gonna punch through a little bit. And this channel here, which has been really the predominant, you know, channel here on the daily since about May, notice that that's going to top out around 1537. It would be really nice to see a very spiky move in the markets and try and see, you know, right at that top, and at the same time see, you know, see profile that would have a lot of excess to the upside with skinny prints up, and have price close up there but have value below, right? To get to, so that we know that these buyers were really buying at the wrong time, where value and point of control didn't migrate up with price. Whereas on Friday, even though we had kind of a spiky bottom here, indicating that it's short covering, which is really a lot of what's going on in this market. It's a lot of just short-term money chasing. We did build some value up at the top, and we did also migrate the point of control much higher. The fairest price to do business went higher, and the value actually built higher. You can see that the value here is higher than the bracketed areas here. So these are all things that I'm keeping in mind going forward. All right, let's take a look at a couple of trade ideas, and I want to show you guys how to calculate size on esoteric futures contracts that you may not normally trade. So let's take a look at 6J, which I've been talking about for a while. I think that there's going to be a bounce here soon in the Japanese yen, which has just been getting absolutely hammered by the Bank of Japan through their currency manipulation actions because they're trying to spur exports. So they want the yen to be as cheap as possible. As you can see, they're doing a bang-up job of it. It's going actually quite well for them. I mean, they're really just disseminating the yen here. But what I'm looking at in the bigger picture here is on a monthly, there should be a Fibonacci retracement bounce here at the 50% fib. You can see here, it's the low to high of this giant move all the way from 2007. And on the monthly chart, we're coming right down into this fib. So how am I going to play this? So the question is, you know, you look at this and you say, well, what is that? That's 0.01, 07, 03, and over here on this axis, it says 10. And it's a little bit, you know, hard to understand what, you know, what your size should be or how you should get in. So here's how it works essentially: is you want to put the chart on a 15-minute or some sort of intraday chart, actually, you know, and maybe pull up a trade tab and go 6J. And I say pull up the trade tab so you can get an idea here of what the bid and the ask are here. Basically, the yen futures are trading in these decimal places that are 6 points out. And if we go back to the chart, you can see here, you just click on dashboard. It will tell you what each one of these ticks is worth for a 1 lot. Change that to 1. And you can see here that this 6th decimal point right here, going right out there, is worth $12.50. And again, this is right here on your dashboard. Okay, so if I know that each tick is worth $12.50, I want to figure out what my risk is, where my stop is, excuse me, and how far I'm willing to let it go and how much I'm going to risk. So knowing that each tick is worth $12.50, I go back out to my daily and I figure, okay, how much am I going to let this go through that 50% retracement before I think that I'm wrong? So this is a pretty wide range day here. So I would expect it would be probably a little bit less than this. This range here is, and I'm only counting in the pips, is like a high of 918. And if you're following along with this at home, I'm looking right up here. I'm looking at these things here, high, low, etc. So I get my 6-digit number essentially from here. So looking at my high to low, for instance, I can see that up here, and here's where it gets kind of confusing because you'll notice that when you're looking at this number here, you have the 6 digits here, but here you only have the 5 digits, and that's because the last digit is a 0. So right here, for instance, the low is actually 0.010760, right? And your high here is 918. So basically what you're trying to find out is how many of those last digits here in the 6th decimal place there, which is each tick, right? Because you know, is going to be your stop basically. So for instance, let's say that I know that this high here, as I said, is about 918 to 760. So I know that a big day's range is 918 minus 760. So in a big day's range, the yen futures run about 158 ticks, right? And we know that each tick is worth $12.50. So if the yen was to move the amount of this wide range day below my stop, I know that I would lose 158 ticks. So I know that would be 158 times 1250. So on one contract, I would lose $1,975 for one contract if I went below there. So that's basically it. And then let's say that was my risk and I wanted to, I say I'm going to do a futures trade. I'm going to risk $10,000. Obviously that would be divided by 1975 and you're going to get just over 5, obviously. So you know that if you're going to risk $10,000 on the trade, in total, you could trade 5 yen contracts. So that's basically what I'm going to be doing, looking for the yen trade, shortly over the weekend here when they open to bounce. I'm going to be looking here on the 50% fib retracement right here on this one. What's going to make this trade tricky is that you have these lows right here, which are actually below the 50% fib. But I think that a breakdown here below the fib, I'm not sure that these would actually hold or that they're really actually any type of important support. When I see support like this on a pullback low, I think of it more of as a minor support, and I think that the fibs actually for a bounce play should have some effect. You can see here that when we came down into the 38.2, right, it was almost like to the penny, and you had it didn't really materialize into much into a big bounce, but the 50% level is much more important than the 61.8. At the same time, the Nikkei, right, is coming, and you notice I've already got the order there for just a couple short to kick it off. The Nikkei is coming into the resistance here, which should tie in with the 50% fib retracement. So that high in the Nikkei right here is 11,450, and we are currently at 11,345. So really just another 100-point move here, which I think would tie in with that yen. So it's the same exact thing. You'd want to get on your dashboard, figure out what the tick value is for one contract. You see, oh, here, you know, 5 points in the Nikkei is worth $25. So you would figure out your stop and say, okay, how many of these 5-point units are between here and your stop, right? So you'd have a high there. Let's say you shorted right at the top and you were at, you know, that high of 11,450. Let's say you got a short off right there and you thought to yourself, well, you know, the Nikkei shouldn't go, you know, say 50 points higher than that, right? So 50 points is obviously 10 of these units, so that would be, you know, a $250 risk on that one contract. So that's how you figure it out. Just basically use this dashboard tab for it. Okay. Another futures trade that I'm looking at, it's kind of a bigger picture thing, similar to this yen and the Nikkei, is what's going on in sugar. Look at the monthly here, and you can see there's a very like long-term trend line happening here with, you know, support starting here from 09, touching here, taking us out here. And I like the way that this trend line has been acting perfectly, just knocking price down. And it seems to me that as price has been moving closer and closer to this dominant trend line, notice that the lows are getting much less pronounced each time. You see what I'm saying? It seems like before on the monthly chart, you had much more definitive lows. Like you moved through here, broke. You made a trend line here, big move down, right? Broke lower. Then you bounced. And here when you started breaking, it's like, can't get much lower, can't get much lower. Rally to the trend line. Instead of breaking lower here, make a doji, right? Go just a tiny bit lower. Again, rally to the trend line, sell off, sell off. So what I'm thinking is going to happen is that there could be like a multi-month move, you know, to snap out to the upside here in sugar. And it would be the same exact thing, you know, just using the dashboard, figuring out what my risk is going to be, how much I'm willing to risk. You can see here on the sugar contracts, 1 penny, 0.01 is the tick size, and each one of those is worth $11.20. So obviously a full point is worth 100 times that. So you're talking like $1,100 for a full point, and that would, you know, essentially tell you what your contract size is going to be. All right, so some interesting stuff coming down the pipe, I think, in the futures market. All right. That is it, actually. I think I'm going to end on that note. So basically, I think S&P is a little bit higher. Profile showing us that there's still some momentum to be had to the upside, not too much further. I'd love to see a spike move into about 1530, 1540 in the S&Ps. That would just be beautiful. I would definitely initiate a large short position at that level. But other than that, we shall see. Have a great week. Thanks to everybody who's been emailing in. The Tasty Trade show has been going great. www.tastytrade.com. Brad and I are on there every day from 2 to 3. We've been getting a lot of great feedback from the viewers, and we've been enjoying it. So come join us there, all right? On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.